Hello, good morning, everybody. Welcome to Finance Transformation Unlocked. My name is Kasha. I am the Product Marketing Manager here at AccessPay. For those of you who are joining us for the first time, Finance Transformation Unlocked is basically an online series presented by AccessPay, which explores the changing role of people, process, and technology in the finance and treasury function. So if you enjoy the session today, we'll be sharing a link in the comments so that you can stay notified about new episodes in the series and perhaps revisit some previous episodes you may have missed as well. So I'm joined today by Finn. Hi Finn, do you want to give yourself a quick introduction?
Yeah, hi everyone. My name's Finn. I'm one of the product specialists here at AccessPay. I work specifically within sort of the financial services sector, helping a variety of sort of different FIs improve process within their payments infrastructure, try and make processes more resilient. So hopefully should have a bit of insight as to what are some of the common trends and how we can try and improve resilience across payments infrastructure.
Thanks, Finn. So, as Finn just alluded to, today's episode is all about operational resilience within financial services, but more specifically around how this impacts your payments infrastructure and your overall corporate banking operations. So, we know that for the majority of you, payments are a key function within your business. With the FCA and the PRA releasing joint guidelines around operational resilience not too long ago. Your initial audits will have already taken place in March this year, with a final deadline of 2025. So many of you will have already have an approved strategy in place, which is great. However, operational resilience is something that's a bit of an ongoing initiative, really. It's an ever-changing beast, something that may work for you today. There's no guarantee that that's going to work for you in 2, 3, 4, 5 years down the line. So we hope that the topics that are covered today will be relevant to you, whatever stage you're at in your operational resilience journey. I did also notice that some of you are joining us today outside of the financial services industry, so welcome. Hello. I do think that please stay with us because I do think that a lot of the topics that we're going to cover today will actually be relevant to you as well, particularly if you see operational resilience as a big focus within your own company as well. It's also worth mentioning before we get started that this session is completely interactive. So if you do have any comments, questions, or thoughts, please feel free to share them in the comment section below, and we'll spend some time, 10 minutes or so at the end, covering these off. So, Finn, to kick things off, I just wanted to ask you, given your experience with working with financial services firms on these sorts of projects, what are the most common themes or considerations that you come across when firms are looking at payments infrastructures from an operational resilience standpoint?
I think it's an interesting one because we'll speak to a variety of different FIs, and all of them seem to come up with different challenges or different areas that they think potentially leave them more open to risk. But I think to break it down into probably three common themes that I come across when speaking to organisations who've already analysed their own payments infrastructure. I think three that come up pretty often will often have the risk of sort of having people involved in multiple parts of their payments infrastructure, so affecting payments or handling payment files, keying in transactions. They'll also identify or try and look at what payment controls they already have in place and whether they're sort of adequate enough in order to ensure that their own payments infrastructure is resilient and robust. And then I think something else that also comes up pretty often is not only the process, but how are they then able to gain accurate visibility and insight into who's actually involved with the various parts of their payments process. So that might be things like how are payments actually affected and what's their ability to actually create accurate reports that then evidence that they are resilient and that they're robust during an audit, for example.
Brilliant. So there's a kind of common theme there around, doing things manually, reliant on people to carry out processes versus perhaps working with a trusted third party to make those things happen, basically. So we're going to explore each of those points in a little bit more detail. So the first thing that you mentioned was around people-based risk. So what would you say are the biggest challenges or the biggest sort of issues that you find when you're speaking to clients about their current processes?
So I think something that we've got to sort of think of fundamentally is much like sort of consumer banking, what we tend to find with most of the corporates that we speak with and most FIs or just businesses in general, is that they'll still be heavily reliant on using online banking portals. So when actually sort of submitting payments, most corporates have a very similar process. Typically, it will involve members of their finance or treasury teams logging into online banking portals. Whether that's just actually keying in data line by line on a bank template, or perhaps they're a little bit more automated in that they're able to generate a payment file from one of their relevant back office systems, so an accounting system or a core banking system, for example. Then that file will be saved on a computer system by a member of the team. They may transfer it somewhere and then it will be uploaded back onto a banking portal. And perhaps there's some form of dual approval within the online banking portal. What we tend to find with organisations who've already highlighted that this process is sort of full of risk is that they'll have identified themselves that there's a number of times within that process that there's a person involved in the transition of their financial data from one secure system to another in the bank. So essentially there's potential for error in that, you've got a person keying in transactional data and potentially they may do that incorrectly. But one of the bigger risks is that, it leaves the business open to potential fraudulent activity because their financial data is accessible outside of a secure system, and potentially then a person can access that data and amend it during that transition from one system to another.
Yeah, absolutely. And I guess as well, when you look at it from a business continuity standpoint, there's a number of considerations that you've sort of laid out there that would have to be sort of mapped out. So when you've basically got a number of considerations. So, what would happen, for example, if there's an increase in demand, for example, if your staff become unavailable for whatever reason. We've just gone through a pandemic not long ago. We've just come out of one in the last couple of years. So what happens if we go through that again? Are your staff fully equipped to be setting up to carry out those processes remotely? So yeah, there's a number of considerations there. You're looking at 7 or 8 potential different risks, I guess, that you'd have to identify and map out. So I'm just curious as well, Finn, why are clients that you're talking to looking to automate these areas? And how do they see that using a third party would sort of compare to managing those processes manually?
Yeah, you make a good point there in that if there are lots of people involved in a process, then there's lots and lots of considerations that need to be taken into account in order to ensure that that process is resilient and it's repeatable, for example. But when I guess an organisation flags that they have this manual process, it is opening them up to a lot of risk. Their first thought will be, are we able to increase automation then in order to remove people risk from this process? And that's where an organisation may start speaking to an AccessPay, for example. There's a good example actually in that one of our customers actually has been through a similar process and has now started to use AccessPay platform over the past couple of years. So Darlington Building Society are one of the FIs that we've been working with for a while now. Very similar use case in that they undertook their own sort of self-assessment in line with the PRA's guidelines to improve operational resilience. They flagged this manual process of either transferring files manually or keying in transactional data meant that they were heavily reliant on people within the business, and that they were also heavily reliant on using these online banking portals. So since sort of speaking with AccessPay, they now have a process in which their core banking systems are connected directly to their bank via something that we'd call an unattended and automated host-to-host connection. So essentially that provides them with an end-to-end bridge between their core banking systems and accounting systems and their bank, and has a robust controls process. But essentially it removes the requirement for any members of their team to sort of do what we've touched on before. So either log into their online banking portal and key data into the portal, or upload payment files and save them locally and transfer them into an online banking portal. So that's meant that Darlington now have been able to dramatically reduce the people risk within their own payments infrastructure, and evidence that they are more resilient in line with PRA guidelines.
Brilliant. That answer kind of segued quite nicely onto the second point that you mentioned at the start of the session, which is all around payment controls. So when you are looking, when you're speaking to firms around the payment controls that they have in place currently, what are the sort of risks that you uncover with those processes when they're primarily manual?
Yeah, so I think typically if an organisation has a payments infrastructure that involves a lot of manual elements, it creates a challenge in that it becomes difficult for them to ensure that there are robust and standardised controls in place. Often within that an organisation's payment infrastructure, if it's manual, they might have multiple systems, disparate processes across one team or numerous teams, and that basically means that their infrastructure opens the business up to a lot of risk. So what a corporate may do is look at what process do we currently have, or what process and controls do we currently have in place in order to ensure that relevant checks have been done on a file. What additional security do we have in place to stop someone who shouldn't be able to access a file being able to? Who's able to access this data? Is there controls in place to make sure that someone who shouldn't be is able to? Often what we find is if a corporate identifies that their payment submission process and the payments infrastructure does have all these manual elements, then the answer to sort of those questions that usually there aren't adequate controls in place, or they're very difficult for the corporate to make sure is repeatable. So it causes more challenges for them, essentially.
Right. So when you talk about payment controls, essentially, you're essentially looking at everything from the way the file's uploaded to the way that it's verified, the way that it's approved, and the way that it's essentially signed off and sent off to the relevant networks and banks. So what do you propose that the solution is to that? And why would you recommend using a third party in this situation?
Yeah, well, again, just to sort of probably touch on that use case and customer story of Darlington working with AccessPay. So if an organisation uses AccessPay within the payment submission process, not only do they have an automated connection between their back office systems and the banks, they're also provided as part of this with a user interface, which essentially replaces the online banking portal, but is designed specifically for regulated businesses, and provides them with a number of mechanisms to ensure that they have the highest level of controls around in and around sort of the payments infrastructure. So again, with Darlington, they now, or the team now, will have access to a user interface which provides them with mechanisms like multi-factor authentication, so we know the person who's logging into the platform is who they say they are. They're able to configure approval workflows so that perhaps if it's BAU payments, then they may just have a dual approvals process similar to a banking portal. However, if this is a large value payment, they can configure that and make sure there are extra approvals and essentially tailor that against whatever their internal policy is on checking files. There are also things like a modulus check and also a check on files which will flag suspicious or duplicate transactions. And then they also have the ability to do things like fix user privileges against certain roles within the business, which then allows for full segregation of duties in what's a business critical process for them. So all of those mechanisms have essentially allowed Darlington to ensure that they have an adequate and repeatable controls in place and remove risk of not just sort of errorsome transactions, but also fraudulent activity within their own sort of payments infrastructure.
Yeah, absolutely. So it's essentially about guaranteeing that those internal control mechanisms are in place for that extra peace of mind, which I imagine makes internal compliance teams pretty happy as well, knowing that they've got this solution in place essentially that can guarantee that the processes, the compliance initiatives that they're laying out are actually being followed through down to the letter, essentially. Which obviously, when you do things manually, you obviously you have good staff that you rely on, and they 9 out of 10 times will do things the way that they've been instructed to, the way that your process is laid out. But it's just about having that additional peace of mind that those processes and those mechanisms are essentially going to be guaranteed. So yeah, that makes a lot of sense. The third and final point that you mentioned at the start of the session was around reporting and auditability as well. So could you tell me a little bit about what the most common challenges you come across in that sort of area when I guess we're looking at data of transactions here?
Yeah, so probably sticks to a common theme again. So we're just looking at whether parts of this process are manual. So if you assume that an organisation does have a manual payment submission process or a payments infrastructure with lots of manual elements, what we'll also find when we speak to corporate is that it's because of that manual process, it becomes increasingly difficult for them to be able to generate relevant reports and be able to provide adequate evidence for audits. That again is because the reports that they essentially will build will be manual because the payment submission process is manual. So that might look like using Excel or running through historic email chains and seeing an approvals process, for example. But essentially, it's just a build-up of a team having to cobble together as much documentation as they can in order to try and provide sufficient evidence of what processes and controls that they have in place during an audit.
Yeah, so I imagine that takes a lot of effort, a lot of time, compiling a lot of data from a lot of different sources. So how does a third party sort of alleviate those pains?
Yeah, again, so just speaking from an AccessPay perspective, it again, because you, so Darlington, for example, or a corporate in general will have access to this centralized payments platform in which all of their team are logging in order to make payments and manage payments. Essentially, that platform will then automatically log all of the activity and movements within the platform. So things like transaction history, who's logged in, who validated a payment, who may have signed off on a payment, where they were and at what time, and then be able to automatically create these reports. They're very specific and accurate reports that can then be exported and provided as evidence during audit without having that manual element of someone having to cobble the data, and it's already there and it's already accurate. It's just a case of being able to pull that from the system.
Brilliant. And I'm guessing that there's also a bit of a cash visibility element to that, right? So like the auditability of balances and transactions across different accounts, for example.
Yeah, definitely. So again, because we're sort of building a payments infrastructure via these sort of host-to-host connections, and we're well aligned with the banks, what essentially we can do is provide things like visibility of all of those reports, but also balances across a corporate's accounts and potentially any movements on cash across their banking estate. And we can do that as frequently as sort of the corporate requires. Because of that, it makes reporting on each account simpler for them, because they have this automated system in place which is pulling information for them as frequently as they want. But a good example of that, so AccessPay have been working with Sainsbury's Bank. Sainsbury's Bank, obviously being a bank, highly regulated, but they essentially needed a very specific report on how they were using the AccessPay platform and what was happening with payments within the business and balances. In a format that was very specific as well, but essentially by working with AccessPay, we were able to provide that basically standard PRA report exactly in the format that the PRA had requested, which was obviously very beneficial for the team at Sainsbury's Bank.
Brilliant. Thanks, Finn. And listening back to all of those 3 points, really, it's pretty clear that they're all completely interlinked. It's all about, this relationship of, do we go it alone? Do we sort of stick to what we know and manage our processes through our people, or do we go out to market perhaps and look at how a third party can help us deliver what we need in perhaps a more automated and more secure and efficient way? And I think whilst they're all interlinked, each of those points were 100% worth exploring in a little bit more detail, because they've each got their own nuances to them, which you brought out really well, Finn. So before we wrap up, I just wanted to ask you very quickly as well if there were any sort of other compliance initiatives that are on your radar where you think that the points that you've mentioned today are also relevant.
Yeah, so when I sort of thought about this question, I think looking back on sort of numerous conversations that sort of I've been having, a bit of a buzzword for us that's been coming up sort of more and more often in our conversations is SOX compliance. There may be people listening to this who are very familiar with SOX and SOX compliance, but basically for those who aren't, it's a legislation that publicly listed companies need to comply with in order to protect shareholders and the general public against financial errors or accounting or poor accounting practices, essentially. And so much of what we've sort of discussed as part of those 3 points and how to make payments infrastructure more resilient and remove opportunities for fraud, or ensuring that a business has adequate financial processes and controls and are able to report on it. A lot of that is mandated as part of SOX compliance. So as part of the frameworks, in order to be SOX compliant, a lot of those points are actually mandated. The sort of caveat to it is that SOX is actually only applicable for publicly listed firms that on the US market. But the but side is that it's coming to force in the UK. So as of sort of, I think, the end of 2023, I want to say, it will be in play in sort of the UK as well. And so any UK firm that's publicly listed, and I think they've actually expanded this as well to any large privately owned company as well, needs to begin implementing solutions and processes that ensure they are SOX compliant. So exactly this process that we've touched on, and if you are an FI that potentially has a very manual process when it comes to submitting payments, then SOX would certainly be something to consider over sort of the next year or so.
Great, thanks, Finn. I guess as well, just from the perspective of actually doing these audits, things like SOX and your operational resilience audits, even just filling them in, writing down what all of those processes are takes time. And when you're looking at, as I mentioned before, putting together a plan around 7 or 8 different processes, it's going to take you a lot more time when you compare to perhaps doing utilizing automation perhaps to take care of a lot of those processes. I've been in conversations with clients in the past where they've said this has literally saved me so much time just by completing my audits. Instead of writing pages and pages of processes, I literally just need to draw one diagram and I'm done. So yeah, even just from the perspective of that, there's massive savings there for compliance teams particularly.
Yeah, it sort of links with your point before about having multiple considerations within this process, but then if you work with an automated third party, for example, an AccessPay, then again, yeah, like you've said, it drops down to one, and that makes life a lot easier.
Absolutely, yeah. I know that another big topic of discussion at the minute, particularly for financial institutions, is ISO 20022 as well, which, as many of you will be aware, that's the new financial messaging standard that is currently being implemented across the SWIFT network. It was implemented across the SEPA network many years ago. And it is also coming to the UK's new payments architecture eventually, some point over the next few years. So it will start to impact your domestic payments, like your CHAPS payments and even your BACS payments. So we are actually already working with a few financial institutions at the minute to support their transition to that new standard. In terms of making sure that file transformation and the data within those files is sort of compatible with that new format. This will also be impacting corporates and other organisations further down the line as well, but that is perhaps another topic for a different episode. I think we are ready to wrap up. I don't think we've received any questions in the comments today, but I just wanted to say a big thank you for watching today, and obviously thank you to you as well, Finn. I think that was a really insightful session. If you did enjoy today's episode, please feel free to subscribe in the comments to make sure that you receive any updates on future episodes. You'll be the first to be notified when those are. And that's it. Thank you and goodbye.
Thanks, everyone.
Bye.